These are 5 indicators currently trending on TradingView. I'll break down how each one works and give you my honest assessment on whether they're actually useful for real trading. They all scored similarly during testing, so I've put them in random order. Change in State of Delivery, CISD. Created by AlgoAlpha, this Pine script indicator identifies market structure shifts through what it calls change in state of delivery, essentially detecting when price commitment changes direction after establishing swing points and liquidity levels. The core mechanism tracks swing highs and lows using a configurable period, then monitors when these levels get wicked or mitigated by price action. When a bearish candle sequence gets broken by bullish price action, or vice versa, the indicator evaluates whether this represents a genuine state change using a tolerance filter. This filter measures how much price traveled relative to the origin point, filtering out weak reversals from significant structural shifts. The liquidity sweep component adds practical value. When a CISD occurs shortly after price has wicked through a swing level, the indicator flags this as a strong signal with triangle markers. This combination of structure break plus liquidity grab aligns with how institutional order flow concepts suggest smart money operates, sweeping stops before reversing. Candles are colored based on the current trend state, providing immediate context for the prevailing bias. The appearance settings allow traders to control transparency and whether expired or mitigated levels remain visible. For practical application, traders might use CISD signals as entry triggers when aligned with higher time frame bias, treating the origin level as a potential retest zone. The strong signals with liquidity sweeps could serve as higher conviction setups. The swing level lines themselves function as targets or stop placement references. The indicator packages ICT-style concepts into automated detection, saving manual chart markup time. The tolerance filter adds meaningful noise reduction, and the liquidity sweep integration elevates basic structure break signals. However, the customization remains somewhat limited compared to more developed tools, and the underlying concepts, while well implemented, are adaptations of established market structure theory rather than novel methodology. Fibonacci projection with volume and delta profile. Created by Zierman, this Pine script indicator combines traditional Fibonacci retracement analysis with volume profiling and forward price projection. It detects swing highs and lows over a configurable period, then draws standard Fibonacci levels between these points, while simultaneously projecting potential future price targets based on the selected ratio. The swing detection uses a straightforward highest-lowest approach over the defined period, drawing horizontal lines at the most recent swing extremes. Between these points, the indicator plots the familiar retracement levels: 23.6%, 38.2%, 50%, 61.8%, 78.6%, with color-coded lines. What sets this apart is the projection component. It extends beyond current price action to show where price might travel if it continues following Fibonacci relationships, displaying percentage moves along each projected segment with a final 1.272 extension target. The volume profile feature adds contextual depth by analyzing the price range between swing points. It divides this range into customizable rows and aggregates bullish versus bearish volume within each bin, displaying the distribution as colored boxes. This reveals where actual trading activity concentrated during the swing, potentially highlighting levels with stronger participation that may act as support or resistance on revisits. The delta profile takes this further by calculating the net difference between buying and selling volume across Fibonacci-defined price bands. Positive delta zones appear in one color, negative in another, giving traders a quick read on which price areas saw dominant buying or selling pressure. This can inform decisions about which levels might hold versus those that were established primarily through one-sided activity. Customization options are extensive. Nearly every visual element has adjustable colors, sizes, and styles. The projection boxes, lines, labels, and volume displays can all be tailored to personal preferences. The indicator merges Fibonacci analysis with volume context, addressing criticism that Fib levels lack fundamental basis by showing where volume actually accumulated. The projection feature adds speculative value for target setting. However, the swing detection method is basic compared to more sophisticated pivot algorithms, and forward projections remain theoretical constructs requiring price confirmation. Dynamic Z-score divergence. Created by Uptrick, this Pine script indicator constructs a composite oscillator by normalizing three popular momentum indicators through Z-score transformation, then detects divergences and mean reversion opportunities from the resulting signal. The core methodology takes RSI, stochastic RSI, and MACD, calculates Z-scores for each over a 100-bar lookback, then averages these standardized values and applies EMA smoothing. This triple Z-score approach attempts to filter noise by requiring agreement across different momentum calculations. When all three indicators show extended readings in the same direction, the composite signal becomes more pronounced. The mean reversion component generates signals when the smoothed oscillator changes slope direction while positioned in oversold, below -1.0, or overbought, above 1.0 territory. This captures the moment when extended momentum begins reversing, theoretically identifying inflection points before price fully turns. Divergence detection follows the classic approach of comparing oscillator pivots against price pivots. When price makes lower lows while the oscillator makes higher lows, bullish divergence is flagged. The opposite pattern triggers bearish divergence signals. These appear both on the oscillator panel and as labels on the price chart itself. The indicator includes an SAEMA overlay system, a self-adaptive exponential moving average that adjusts its smoothing factor based on RSI Z-score intensity. During high-conviction moves, the EMA becomes more responsive. ATR-based bands surround this average, with visibility toggled based on trend direction to reduce chart clutter. Bar coloring options allow traders to maintain visual context of the current bias without constantly checking the oscillator panel. The triple Z-score concept provides genuine value by creating a standardized, comparable measure across indicators that normally operate on different scales. The combination of overlapping systems risks information overload, and the default display hides most functionality, making initial assessment confusing. EMA market structure. Created by Boss Waves, this Pine script indicator merges exponential moving average trend filtering with swing-based market structure analysis, providing break-of-structure signals alongside suggested stop-loss placement. The EMA component goes beyond a standard moving average by implementing a gradient color system based on acceleration. Rather than simply coloring the EMA by direction, the indicator calculates the rate of change in the EMA's movement. The result is an EMA that shifts through a color spectrum reflecting momentum intensity, not just direction. An optional glow effect created through multiple plot layers and fills gives the EMA visual prominence on the chart. Swing detection uses standard pivot logic with configurable lookback periods. The indicator tracks consecutive swing highs and lows, drawing connecting lines and optional shaded zones between them. These zones represent potential support and resistance areas where price previously reversed. The break-of-structure system triggers when price closes beyond a previous swing point, while the EMA confirms trend direction. A bullish BOS requires price breaking above the prior swing high with the EMA rising. Bearish BOS needs price below the prior swing low with EMA falling. This dual confirmation filters out structure breaks that occur against the prevailing trend. Each BOS signal automatically plots a stop-loss level at the triggering candle's wick extreme, plus a configurable buffer percentage. The SL extends forward as a dashed line with an accompanying zone box, providing clear risk reference for trade management. The indicator delivers practical trade management value through automatic stop-loss plotting, a feature many structure tools omit. The gradient EMA adds visual sophistication without overwhelming the chart. The cool-off system intelligently manages signal frequency, and the buffer percentage for stops shows attention to real-world application. Protected highs/protected lows trading. Created by Hardway Bets, this Pine script indicator implements a multi-layered market structure system centered on identifying protected price levels, swing points that institutional theory suggests smart money defends until they're ready to reverse. The indicator operates through three interconnected steps. Step 1 detects traditional swing highs and lows using pivot logic, then draws horizontal lines when price breaks through these levels. These lines persist until price closes back beyond them, providing visual tracking of broken structure that may become future support or resistance. Step 2 introduces sequence analysis, tracking consecutive bullish or bearish candles, and recording the extreme open prices within each run. When price breaks the minimum open of an up sequence or maximum open of a down sequence, the indicator marks this as a significant structural shift. This approach captures the concept that consecutive directional candles represent committed moves, and breaking their origin signals potential reversal. Step 3 adds supply-demand zones by drawing boxes from the prior candle's 50% level to its close when sequence breaks occur. These boxes can reference higher timeframe candles, allowing traders to identify zones where institutional orders might cluster. The multi-timeframe capability lets users align lower timeframe entries with higher timeframe structure. The protected high-low markers, P-high, P-low, represent the core concept, identifying swing extremes within impulse moves that should hold if the trend remains valid. When these levels get violated, the indicator removes them and triggers alerts, signaling potential trend failure. Impulse origin lines mark the open of the first candle in a directional run, theoretically representing where smart money initiated their position. These serve as potential retest targets. The protected level concept adds genuine value for tracking trend health. However, the three-step system creates visual complexity that may overwhelm newer traders, and the methodology requires understanding of institutional order flow theory to apply effectively. Extensive customization allows display simplification, but the learning curve remains steeper than simpler structure tools. Let me know in the comments which indicator you'd actually add to your charts. And if you want a tool that handles entries, exits, and risk calculation, check out the free Quantum Ribbon video on screen now.